Now, this concept is what we call change of character versus break of structure. Change of character versus break of structure. These two things work together. And I'm going to be using this to explain it and the chart to explain it better. So, change of character versus break of structure. This is very important. We have to understand this. You know, market move. Uh, I mean, uh, uh, market does not move straight like this. It move straight, change the character from bearish to bullish, from bullish to bearish. That's how market move. Market does not move just up trend like that. And I've told you why is market moving like this, turning back, returning back. Why? What are they looking for? Those not commercial. What are they trying to look for? They are looking for four major things: fair value gap to fill, which is the imbalance, the inefficiency, or they are looking for liquidity to sweep, or they are looking for order block or breaker block. These are the four major things they are looking for. They don't, if you can understand these four, which I explained in the last video, please, if you want to get the understanding of that one, you have to watch my last video where I explained these four major things that non-commercial are looking for. And that is what is making the market to move up, down, up, down. So what is making up this down trend, up trend, down trend? What is causing it is four major things. One, liquidity. And I told you these are point, liquidity point, liquidity point. All these places you are seeing, they are point of liquidity. All these point you are seeing, they are point of liquidity. They are places where people place their buy and they place their stop loss. They place their buy and their stop loss. So market must always come back to take out those places, to wipe all those stop loss, because that is the fuel of the market. That is the money in the market. That is what the market is all about. Market, the big banks in the market, they don't look for another thing. They look for your money. They look for where you place your stop loss, where you place your buy limit, sell limit, stop loss. That's where they look for. And once they see it in their system that there is a bulk of stop loss here, they will come back to come and wipe it. After they wipe it, the market will now turn back to move in the other direction. So they are liquidity hunter, and you too must be a liquidity hunter to be able to trade along with them and to get the result they are getting. So if you refuse to trade along with them, you will become that liquidity. They will wipe your money. That's how it is. So there are liquidity here, liquidity here, liquidity here, liquidity here. All this point there are liquidity. So you will see that liquidity here, the liquidity in this place was wiped. This okay, this is down trade. This is down trade. The liquidity in this place was wiped by this one. The liquidity here was wiped by this one. Market move down, up, down, up, down like that. So this liquidity here was wiped by this one. This one was wiped by this one. This one is waiting to be wiped by this one. It is this one here that came to wipe this one. In the up trade, liquidity here was wiped by this one. Sorry. As the market move up like this, move down, creating what? Liquidity here. This one wipe this one. This one wipe this one. The same thing here. This one wipe this one. This one wipe this one. It's as simple as that. The liquidity uh, market move up like this, create liquidity here. Retrace back, move again, create liquidity here. But this liquidity was wiped by this liquidity. And this liquidity here now was wiped by this one. This is a liquidity, liquidity, liquidity. So this one wipe this one wipe this one. In the the down trade, in the up trade, this one is wiped by this one. This one wipe this one. This one wipe this one. This one. That's how it is. For the change of character. What is the meaning of change of character? Change of character means market is no longer bearish, it's now bullish. Market is no longer bullish, it's now bearish. And why is market bullish, bearish, bearish, bullish, bearish? Why? You see, they are coming to take out liquidity. Any liquidity that does not take here, take out here, 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 all this one that does not take out here, it is this one that will take it out. This one that will take it out. So this one now came to take out this liquidity. This one came to take out this liquidity. It's as simple as that. Why this one came to take out this liquidity? This one came to take out this one. This one came to take out this one. That is, this thing is everywhere in the market. So when market is moving in the down trend, you will have break of structure. This is called BOS, break of structure. It means market move down, create a liquidity here, retrace back, create another liquidity here, move down again, create another liquidity here. So this one already break this line, already break this, already clear this liquidity. That's the meaning. The meaning of break of structures means liquidity has been clear. That's the meaning. Liquidity here has been clear. Waiting for this one to be clear. This one clear it. That is this break of structure. It break it. It means this market, this line is the one that break this liquidity, that wipe this liquidity. And that's what it's all about. Market. Market, you will always see BOS everywhere in the market. What is the meaning of BOS? Why the liquidity has been wiped. Liquidity has gone. Money has gone. Opportunity has gone. Somebody has lost money. That is it. BOS simply means somebody has just lost money. Now, that is the meaning of BOS. Money has just gone. Liquidity has been wiped. Liquidity has been wiped. The same thing here, under this place. This one, this break of structure, this line is what break this structure. This line is what break this structure. Yeah. And it simply means the liquidity here has been wiped. Liquidity here has been wiped. It's as simple as that. That's what calls up trade, and that's what called down trade. So what is moving the market is liquidity. Liquidity is the fuel. It's all about everything in this market. Liquidity is the one that is moving the market. So when the market moves to another trade, we are coming from down trade to up trade. We call it change of character. And even this change of character, what is the purpose of this change of character? Is liquidity. You can see liquidities are plenty here, isn't it? Then this one come, break out the liquidity here, clear all the liquidity here to to this place, to create BOS for another uptrend. And before you know it, it will change from higher low, lower low, higher low, lower low to higher high, higher low, higher high, higher low, higher high, higher low. Then it will change again to what? Lower low, higher low, lower low, higher low, lower low. That is how market move. So this is a change of character, meaning, and what is the mean? What does it mean to change character? This one came to wipe the liquidity, the last liquidity. This is the last higher high here that was broken by this line. And what does it mean that was broken? It means the liquidity of this higher high, the last higher high, has been wiped. So there's no more higher high here. No more higher high here. We have higher high, the last higher high and higher low is this. Then there is no more higher high, higher low, higher low down here again. What happened? The market change character. Character of bullish is now changed to what? Instead of higher high, higher high, higher low, lower low, it now changed to higher high, higher low, higher high, higher low, higher high, higher low. And this is the last higher high, higher low. How do you know the last low? It must be the same, it must be equal with the former one, or a little bit lower than it, above it. So like this one is above it a little bit. This one can also be above, you can come down a little bit here. Once you see it here, it means this character has been changed. You see it now? It is this one that changed this character, not this equal one. This one is equal low. This is equal low, 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 equal low. But this is the one that changed this character from, this low now is lower than this low. This low is lower than this low. So this is the one that changed this character, not this one. But here, this eye is higher than this eye. This eye is higher than this eye. So this is the one that changed this character to bullish. Why this one changed this character to bearish? And that's why you start seeing BOS at this point. Higher low, lower low. It will start creating like that, higher low, lower low like that. Down trade, up trade, down trade. So that is the meaning of change of character. Market move like that. And what are they looking for? Both change of character, BOS, what are they looking for? They are looking for fair value gap to fill, liquidity to sweep, uh, uh, OB to clear, or breaker block to clear. These are the four things they are looking for. Once you understand this thing will not move you, whether it's turning to bearish or turning to bullish. What you will be looking for is your liquidity, your fair value gap. That is what they are about. Once you see this market turning back now like this, it means they want to go and clear something here, either fair value gap or clear liquidity or other block. That is what they want to go and clear. It's as simple as that. Listen to me. Just get this thing straight. What non-commercial are looking for? They are looking for your stop loss to wipe. That is the money now. They are looking for the money. They want to get money. And where is the money? Where do you have the money? Where you place your stop loss, your buy limit, your sell limit, stop loss. That is where you're looking, where you want to pick your profit. That is where they are looking for. And they will come after it. They are coming to clear it. That is forex for you. Forex is liquidity. Forex is liquidity hunting. That is it. Forex is all about liquidity hunting. Hunting liquidity is forex. I get my point now. You can see it's the same thing here, the same thing I explained here, the same thing. And you can see this is the demand zone, and this is supply zone. This supply zone, the demand zone. So why are they buying here? Because they want to go and wipe one liquidity somewhere, or one fair value gap somewhere, or one breaker block, or other block somewhere. And once they finish wiping it, the market will turn back again. It's not that this intention of going up now, not that they want to go up or they want to be going up. No, they are going up because they want to go and wipe something. And after they wipe what they want to wipe, market will turn back again. So you can either go along with them, follow them behind. You are like a sack. They are the sack. We are the small fish in the what in the water. If you go in the front of sack, what will happen to you? Sack will swallow you. But if you are behind sack, anything that sack is eating, that is small thing that they are eating, you'll be eating it from their behind. Whatever they eat finish, that will remain, that drop, you will take it and eat it because you are behind them. So you can go behind them to buy, go behind them to sell. That is the secret in this market. If you go and stay, see the place by here, you go and stay around this place, you go and stay here. They will come back here and wipe you out of the market again because they want to, because they will not, they will go and come and pick liquidity here to start. So now the liquidity is to strengthen them to continue their journey. See now they started the market here. Why did this one turn back? This one turn back because there is a liquidity here to pick, so that this one can be strengthened. There's a fuel here. It's like you are going to Ibadan. I mean, you are going to a particular place with your car. You start the car here. You get here, your fuel. Your fuel reduce. What will you do? You branch filling station, buy fuel, top up your fuel, then continue your journey. That is what about. These are fuel. These are point of fuel. Top up fuel. All these are point of topping up fuel. All these are point of top up fuel. They will come here, top off fuel, go back again, top off fuel, go back, top off fuel, like that. Because these are the fuel. And as they are coming here, they are picking your profit, your stop loss, which you have placed here. They are picking it. They pick it, they go. They pick it, they go. That's how it is. So now, if you want to get this very well, difference between change of character and BOS is as simple as that. I've explained it. This one, my daughter, BOS. Now, BOS is change of character. No, market come to this place, return back a little bit to refuel, to top up their fuel, which is your stop loss that you put here. They don't take this stop loss now. Then they go up again. This one is the one that break this structure. It is called BOS. And why did it break this structure? It just came to wipe all the liquidity here. The same thing here. This one came to wipe all the liquidity here. So this one that came down, why? Is the change of character, because it's no longer going up. There's no longer higher high, higher low anymore. This is the last low. This is the last high, last low. Or you can call this one last high, last low. So this last high, last low, you will. Now, I'm going to explain something about premium and discount. I'll do that one later. So this high, low, as it change, at times we call this one A, B, C. As it change, the market will just come out of it a little bit to wipe out the liquidity here and come back again to go and retest that top. Once you retest that you can place your trade here. See now, market will go straight. Let me explain this to you very well. When the market change to the other side, that's from up trade to down trade, look for change of character point here. Allow market to retrace back to the point of the last high. It may not reach the top here. It may stop at this point. If I need to explain something to you, because the broker may spread their spread here to cover up this place for you, to cover up this place for you. So that spread of this broker can cover up this place for you. So it may not reach this high. It may come close to this one. Maybe there is a fair value gap here that it just touches small, and the market will start coming down. So this zone is your what? Your order block or your supply zone where you can place your sell. The same thing here for buy. The last one that break the structure, this one, this one that break the structure, you enter your buy here. You buy here, you sell here. So that is the difference between break of structure and change of character. Change of character, this is break of structure. This is change of character and break of structure. But this one is only break of structure. Break of structure here means you can buy here, you can buy here, you can buy. All these points are buying zone. Buy, buy, buy. But when market change character, you wait for it to retest the top and started selling from that top. I think I've done justice to that. It's still the same thing here. These are liquidity point. You can see you come here to what? This one come to wipe the liquidity here. This one come to wipe the liquidity here. This one come like that, like that. And on the up trade, character change here. Then you can see the character change to bullish and bullish to what? To bearish. So I've explained that. So you have to understand this thing. Now, this is what is called bearish order block. I've explained this in my last video. Bearish order block. I said the candle, the bullish candle that caused this down trade, which is this green. This green is the one that caused this down trade. Is what's called order block. Our market will always come back to what? To retest that place before they will start going down again. So market can come back to retest order block. And how do you spot your order block? You can see it. You can see the way they spot it. The up and the middle and the tail. The up, the middle, and the tail. That is the zone. It means all this zone now are your order block zone. All this one here are the other block. All this one here are the other block zone. Other block zone. So you can see. So so the market must always come to that other block to come and what? To come and retest it before market will go down. So what market is looking for? The reason why this market turned back like this now is because of this other block or the fair value gap. This is the fair value gap. So the market, this one can come a little bit to clear a little fair value gap here. Always, all the time, market will not come and clear, not turn back immediately and clear the fair value gap. It must retrace back like this, retrace back again, retrace back again, retrace back again, before it will finally clear the fair value gap and clear the other block. You can see now, there are two things that this market came to clear here now. The fair value gap, and the other block. You see it before they started retracing back. So the intention of this movement is not because of anything, it's because of that two, fair value gap and other block. You see it now. So let's look at more other block. Now, this is all this place now, other block. On the down trend, the last bearish candle that caused this movement is your other block. The last bearish candle, and you can see the way it is spotted right now. Here is the other block. So market, this other block now. Are you getting now? After this other block, what happened? Market move up. You will discover that this market that is moving up, it will still come back to come and clear this other block. This other block here is this demand zone. Another name for it is demand zone. And this is our double bottom, bottom, buy. You see it? So this is very clear and glaring. Bottom, buy. If you look at this one, you see it, top, sell. Eh? You see, bottom here, buy. Hmm? This is about double top also. And I told you there are liquidity here now. Liquidity are plenty here. So this market may not come back, may not come to this place to sweep the liquidity. At times it may not come here, not all the time it will come and sweep the liquidity. For now, though it will come and sweep it later, but it may not. You see now this one now, it did not come to sweep liquidity here. Because this is where stop loss and take profit, stop loss and buy limit are. But it came to sweep fair value gap, came to sweep other block and turn back. After some time, it will retrace back, and come back to sweep this liquidity and this liquidity. So there are two major liquidity here now, this one and this one. So market will retrace back to come and clear the two at one time. You will see this move now, it will go like this, boah, to come to this place, coming to clear the liquidity here, liquidity here. You can see I am a advocate of liquidity. Liquidity is what you must be looking for in this market, or fair value gap, or other block. But the main one you must be looking for is liquidity. Are you getting me now? Look at this place now. Look at it. There is a liquidity here. Little liquidity. Before this double top button was formed. This double button was formed purposely because of this liquidity here. And maybe liquidity in this place. Liquidity here. Market come a little bit. Create another liquidity here. We have two liquidity here now. One liquidity, two liquidity. So which this one came voila. This one came voila to clear the one. It does not even clear this one. You see, it's a manipulation. This one is a manipulation telling you that maybe they want to say no, they're not selling. This one and this one, they are equal what? Equal high. You get it now? So this one does not even clear the liquidity. But it create another liquidity. So we have how many liquidity now? One liquidity, two liquidity, three liquidity. It is this one now that will wipe the three of them. After a wipe it, see this move. See this long move for sale. What is this one coming to do? Can you tell me what this one long one coming to do? To wipe the liquidity that are here. Or maybe another one here, but the main one that is wiped is this one. The liquidity that is here now is waiting for this one that is going up to turn back to come and wipe. Are you hearing me now? So it's as simple as that. It's a liquidity, they are liquidity wiper. So they are liquidity wiper. Liquidity is here. Come here, wipe it. This one came to wipe it. It's as simple as that. You can see bullet order block. How do you know that this is a valid order block? How do you know a valid order block? You can see it. Order block is also like imbalance, meaning there is no balance there. The market has not completed. Look at it. Look at this candle, and this candle. This is the order block. It means there is still space here that this market need to fill. There is space here that this market need to fill. Are you getting me now? So this market will turn back here now to come and fill that space. So all this thing we are talking about, either breaker block, order block, fair value gap, is looking for a space that is not yet filled to come and fill it. So order block is creating a space. Maybe they bought, but they have not sold it. There is no account of selling selling thing there. They have already bought it. For instance, let me show you here. They say valid OB, invalid OB. Why do we call this one valid OB? Valid OB because there is something bought here that has not been sold. It is called order. This one is order block now. It is valid. Why this one is not valid? Because it is both buy and sell. They buy here and they sell here. This is already complete now. There is nothing here to buy. This market is complete because this first candle uh, overlap this candle. This first candle already overlapped. This one is already inside this one. You can see that this one is not inside this one. It's not inside this one at all. There is a space here. This arrow they put is a space. It's a space that the order has not been ordered. There is no order there. And the order must be filled. It must be efficient. But here, the order, no takeout. There's no takeout here. There's a takeout here. Something here has been taken out, but nothing has filled it back. But here, there's nothing that is taken out. The market has been filled. Both buy and sell has happened here. Likewise, your fair value gap. When you see fair value gap that is valid, I will show you now because of this thing. There are fair value gap that is valid and there are one that are not valid. The one that is valid is the one that has space. That means the space that there is a space that has not been filled up. Like here now, look at this place. Look at this three. This three. 1, 2, 3. There is a space here. I've seen you. I'm getting it. Don't mind my daughter. Now, there is a space here that has not been filled up, which this one came to what? To fill. It is this one that came what? There is a selling volume here that this buying volume come to fill up. That is what's called fair value gap. Once it is filled up, there's no more. It's already efficient. The market is efficient now. Market is balanced. There is equal buy and equal sell. Equal sell and equal buy. It's as simple as that. So here now we have equal sell, equal buy. It is filled up already. Here, this candle, if the top candle starts from here, it means we still have what? Inefficiency here. We have inefficiency here. So order block is the same thing. Order block, we have something that is not yet filled here. There are order that is not yet filled here. But here the order is already filled up. Do you see the difference now? Please note this thing. Which order block is valid? Which one? You can tell me now which one is valid here. If I bold it very well for you. Which one is valid? This one is valid. This one is not valid. It is balanced. This one is valid. This one is not valid because this one came in to balance it up. This fourth one already came in to what? To balance it up. To balance this play up. So this is not valid. This is valid. This is valid. These two are valid. You can see they are weak. Eh? This long wick has made this one to be invalid. If any time this long wick come, it has make it invalid. Meaning it has already been clear. It's no longer order block anymore. Once it is filled up, it's no longer order block. For instance, like this now, like this one, like this one, this one. Once it is filled up, it's no longer order block. It's no longer order block. It becomes order block if it has not been filled. Once it has been filled up, it's no longer fair value gap. It's fair value gap when it has not been filled. I think I have that one, the other one there. So that is it all about order block. I think I've explained that one. Please get it clearly. Then here we have which change of character is valid. This one is the one that is valid. This is not valid. This is not valid. Let us see it. Change of character. Market is moving up. Create liquidity. This one came to clear the liquidity. And that liquidity is created here. This one came to clear it. The market come back to what? To cause a change of character here. This one now come up here. Break of structure happen here. This one came down. This one is the one that changed the character. This one. Because the low of this one is taken out here. And the high of this one is taken out. How do you know a change of character that is valid? The low, the low must be taken out and the high must be taken out at higher time frame. You can see it must be higher time frame supply zone. Higher time frame supply zone. This is higher time frame. That is the 1 day, 4 hour, 1 hour. So how do you know that this market want to change character? The last high must be taken out. They must wipe the liquidity here, and they must wipe the liquidity here. The last high and the last low. This is the last high and the last low. Do you see it now? The same thing happen if it is a for sale. For sale also is the same. Are you hearing me now? So the last high and the last low must be taken out for a change of character to happen. Before you know it now, you now begin to have higher high, higher low, lower low, higher low, lower low. This one is valid. This one is not valid. Why is this one not valid? Let us see it. Why is this one not valid? The change of character here. BO okay. BOS here. It's almost the same thing. Why is it not valid? I'm not getting what they are. Why they say invalid coach? Oh, this one is invalid coach. You can see it because this last low was not taken out. This is invalid what coach? Because this last low was not taken out as this one. This last low was taken out completely. It means they came to wipe the liquidity that is here. They wipe the liquidity that is here. This BOS is to wipe this liquidity. This coach is to wipe this liquidity. Both last high, last low was wiped. That's what make it a valid coach. But they say this one is not valid because this is not taken out. This is not taken out. Only this one was taken out, but this one's not taken out. So now that is it. I think you can check this thing. When we go to the chart, we will see it better in the chart. Yeah. Now breaker block. Good. What is breaker block? No break. You know break. When we say break, break. This look like break, right? Break. Break has two mouth. One mouth here and that mouth here that overlap each other. This is what is called breaker block. Breaker block. So what market look for is 14. Are you hearing me now? One. What market look for is what 40. One. Liquidity. Two. Breaker block. Three. Order block. Four. Fair value gap. This, if you can master this 14, you will understand trading and you will benefit, you become profitable in your trading. If you can master this 14, liquidity, breaker block, order block, fair value gap. If you can master this four, my brother, you will become a master in trading. This is what non-commercial look for. This is all what they are looking for. They don't look for any other thing. This is what they are looking for. Once they get this, they wipe it, take your money, go. That's how it is. I think you are getting my point. Now, here, you can see market move down trade, up trade, creating liquidity here. Create liquidity here. Coming. Create liquidity here and voila, move, move up, move up to now when it move to break it break when this liquidity is wiped, they came back a little bit. What did they come back a little bit to do? To come into this break. So this is called breaker block. Why this market start moving up is because this has become a very strong resistance, and this one is coming as a support. The support, the resistance here has become a support here. Resistance has become a support here. That's what's called breaker block. Breaker block is when resistance, the top here is resistance, down here is support. This is support. This is support. This is support. These are support area, support area, support area. Again now. So at time, when you look at your resistance area, when market is turning back, market can turn back from that resistance area. The resistance can push the market back. This is resistance point. This is support point. So it is a break. It's a break. It's a break. So at time when you are trading in the up trade and you see a resistance here where you have a liquidity, plenty liquidity here, and market is coming to sweep that liquidity, but don't forget that that resistance is still valid. Now, market is turning back again of that market can stop, can what? Can stop you here. This one can stop it from going down. This resistance can stop it from going down. Instead of it to go down now, it will now pick up again and start buying because of this resistance. So when you are trading, you must look at your left and right. Look at your left. Do you have a breaker block here that this market that is turning back can stop? So at times, what make market to reverse back and the level market can reverse back is also determined by your breaker block. You can see now the level this market reverse back now is because of this breaker block. The level this market reverse back is because of this breaker block. This is a breaker block here. This zone is a breaker block. So this is a break. So the level at which this market can reverse back is because of this breaker block. So you can enter sell here and put your take profit here because of this on the same straight line of this breaker block. Take your profit here because the market will definitely, not all the time, respect this top. Market will definitely respect it. This is up trade. The same thing in the down trade. You must watch out for breaker block. So these are the four major things you must watch out for: breaker block, order block, fair value gap, and liquidity. Now look at it now. This one show it a very good, a very good breaker block here. This is a very good breaker block here. You see it. You see here. Breaker block is also like a order block. This last candle that make this market to turn down. Then connect to the candle here. You see, why did this market turn back here? Why? Because of this breaker block. Yeah, you will say, but this one go down to this one. Why is this one up here? Yes, it's still breaker block. It may go down a little bit. No, this one does not. This one is just, even if you put a line here, you know that this one come down a little bit. Why? The purpose of this is that they are coming to wipe liquidity or to fill fair value gap. The extent to which this one can go is as a result of either fair value gap or another what order block. That's the extent to which this one can go. So you can see that here now. You see this one coming down a little bit. You may not expect this one to come down to this place to form a double bottom before it will start going up. At times, it may not come down here to form a double bottom. That's why at times I use trail line here to connect this line to this line to this line. This trail line has given me three bottom. 1, 2, 3. The market will go up. 1, 2, 3. Market will go up. So this is bullish. This is bullish breaker block. This is liquidity sweep. You see now? See what the right here? Liquidity sweep of sellers. Valley bearish order block. Okay, there's no anything here. This is order block, breaker block. This is order block. This is liquidity sweep. What sweep it? This one, BOS. They have swept the liquidity here. They have swept the liquidity here. Voila. There you see. This is order block. This one is called order block. This one coming down here, returning back here is because of this. So you can see that all these things work together. Breaker block, order block, liquidity. These are the things. Fair value gap. Fair value gap. These are what they are looking for. This market is looking for all these 40. This 1, 2, 3. Fair value gap 4. That's it. Our market is looking for. This fair value gap that you are seeing here now, market will turn and come back again to clear it after some time. So you can see that is how it is. This is acting as support. Yes. Yes. Now say acting as support. So this is a resistance becoming support here. Resistance becoming support here. Once you see a resistance becoming support, it will turn back. It will turn back. You can place your buy here. Place your buy here. Want to see this? Want to see this breaker block? Place your buy here. And at time, how do you know the extent to which this will go? Use your Fibonacci. I will do that one. I think that will be the next video I'm going to do now. How to use your Fibonacci to know where the market will retrace the level to get your what? To get your premium and discount. You see here, you can place your the 50%. When your 50%, the under your 50% is your discount, above your 50% is your premium. I will explain that one in the next video. So I just want to make sure I get this one clear to you. Breaker block. Yeah. Breaker what? Block. You see? This is the breaker block. This is the order block. Huh? Breaker block simplify. This is the breaker block. How is it breaker block? This. It's a resistance here. It becomes a support here. Are you seeing it now? It's as simple as that. It's a breaker block. So this market will turn back a little bit at this breaker block, then start going up again. So the reason why this market go back again is because of this breaker block. So breaker block will always be respected. This is the other block. This one, this black one, the last black one is the other block. And you can see we have a what? Fair value gap here. But this fair value gap may not be filled. Once it has touched breaker block, it has finished. It's either it's touched breaker block, order block, fair value gap, before the market will start continuing again. One of it must be respected, or all of it must be respected. So you can see here. You can see here. What is this? This is what? Liquidity what? Zone. Liquidity zone. This is liquidity zone. 1, 2. All this thing you are seeing, this noise you are seeing, and this thing forming double bottom here. Why? Look at this. Look at this bottom. I think you can see the bottom. This bottom. See at this top. This top. This top. Why is this top higher than this top? Because this top came to sweep the liquidity that is here. That's why it's a little bit high. And the extent to which it can still go is if there is fair value gap up there to go and clear before it will start turning back. And this turning back, what is it coming to do? To come and sweep the what? The liquidity that is here. This turning back come and sweep the liquidity here. because they know that all the buyer there, those who buy here, they put their stop loss in this place. So this one came to sweep it. So simple as that. The same thing here. See, out of spot liquidity. Wow, I like this. This is what is called SMC. SMC, out of spot liquidity. It's very simple. Now, resistance, supply zone, liquidity. This is liquidity. This is liquidity. This is liquidity. This is explain this. This is liquidity. This is liquidity. This is a market structure. Eh? In fact, this one is also breaker block. This is breaker block. Support becoming resistance here. Support here becoming resistance here. This is support here becoming resistance. That's why you see this thing turning back. At time when you see a support here and market is going, it may turn back a little bit because of this support. Because of this support, market can turn back here. You see it now? See this support here is what affect this market here. This one you are seeing. You want make the market to turn back. Market is going up and turn back here. Why? Because of this and this. These are the two. Especially this one is the one that pulls this market back. Because this is another liquidity point. Are you getting my point now? So now, this is demand zone. All these are demand zone. These are liquidity. This is demand zone. They already place a demand there. Double bottom. You see? Double bottom. People are already buying here. This market is already stop loss already here. This come up. Wah. Liquidity come. Wah. To come and clear this what? This whatever you have here. The same thing. People are already selling here. Selling already going on here. Because this is internal structure. Internal structure. There is resistance here. This resistance, imagine now, this movement came to wipe the liquidity here. This one you are seeing here. Why did it go up a little bit? Came to wipe the stop loss here. Why did this one go a little bit higher than this one? It's because they know that this is liquidity. And this market must come and what? Wipe the liquidity here. Why did this one go higher? Why do we have higher high, higher low, higher low, higher low like that? Why is one high and low? High low is because the one that is high will come and sweep the lower of the other one. The high one will sweep the lower of the other one. The high one will sweep this one. And you see, that is all about this market. That's the secret of this market. This high will sweep. So the extent to which this high will now go after they have swept the liquidity is if there is still a fair value gap to or other block to what? To clear here. Because there are also an imbalance in the market, which must be clear. Are you getting my point now? So you can see supply, liquid. So this market come, this one come purposely to clear. And you can see it go a little bit up than what you have here to clear what? The liquidity that is here. It's as simple as that. That is everywhere here. And you see, we have that's what we call it. I'm explaining the reason why we are having double bottom, triple bottom, double bottom. The reason why we are having all those things because of liquidity. They are coming to sweep liquidity. To sweep liquidity here. This one came to sweep this liquidity. And this one you are seeing came to sweep the two liquidity here. This one you are seeing came to sweep the liquidity here. There is a small liquidity in this place. This one came to sweep it before it started going up. And you see, as they sweep it, they started going up because there is no fair value gap here to cover again. That's why you see it going up like that. And later come back here. Yeah, I've explained this. Yeah. You can see fair value gap, fair value gap, fair value gap, fair value gap. Very important. You see, once you see this double bottom, buy. So, yeah, all this thing, fair value gap. This is fair value gap. This one, fair value gap. You see, this is fair value gap. That as this market is going, this market must come back to come and fill this fair value gap. This is what's called fair value gap. How do you know fair value gap? With 3 candle, 1, 2, 3. And the market must come and fill it. That is it. You see, fair value gap here. This market come, come and take care of this fair value gap. And once you take the fair value gap, what happens? Voila. You see, you can even place your trade. You see, This market come here to come and feed this fair value gap. And once it touch this fair value gap, it may not touch it finish. The reason why it will not, you may not wait for it to touch it finish before you enter the market is because the spread of the broker can cover it up for you. I will show you in the chart now. That is why in your chart, please, in your chart, you have to, all of you, return back this thing because it's very important. Is the trade of the market, the trade of the broker. Let me remove all this. Remove all this so that it will not confuse us. Now, go place your cursor here. Then uh go to this, go to your setting here. You see your setting. Go to your setting. Then go to ask price. That ask price, click on it. Ask price line. Yeah. Did I already click on it? Why it's not showing me? Last price line. So last price line. Ask price. Let me see, maybe it will give me what I'm looking for. Uh-huh. This, you see, this line, this is the ask price line. This is the bid, which is buy. No, this is the selling line. That ask price is your sell price. Why this one is your buy price? If you place your trade here now, if you place your trade, no, it's supposed to be. I'm not getting this thing on. Let me see. I'm not getting it. This one I put. This last price is wrong. It's ask price I need, not last price. Ask price. Remove this one. I need this so ask line here. I want it to show ask line. Okay. Let me go to like 30 minutes. Yeah. Let me expand it. Now you can see we have two lines here. Return back your second line. I want to, if you are in my class, return back your second line so that I can explain something to you there. This second line, if you look at your blah 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 blah. Okay, I cannot get it here now. On your page, on your peers, where you see all your peers, all those peers, where you have two price in the front, one red, one ask, one price. So the difference between two of them is difference between two of them is your. I don't want to slant this thing. I will have show you, or maybe if I slant it, oh, I don't want to slant it. It will distort this video. This line is the ask price. Why this one is the bid price? This green line is your buying price. Why this one is your selling price? This one is your buying price. So if you place your trade now, the difference between these two is your spread. So if you place buy now, the buy will start from this red. If you place sell will start from this green. It's as simple as that. If you place buy, you will see your buy starting from this red, and your the other one will start from your sell will start from this green. So the difference between two of them is your what? Your spread. So let it be there so that you will know when you are placing buy, where to start your buying from and where to start your sell from. And I think I need to stop this video so that I can finish it in the other one. Okay, let me just round up this fair value gap. This is fair value gap, you see. And the moment the fair value gap is taken out, you see what happened? Market move up. The moment you see, I told you, market will always do for either fair value gap or liquidity here before they will start moving to the new direction they want to move to. The same thing here. Once the fair value gap is taken out, what happened here? Well, see this person now enter this trade immediately. Once the fair value gap has been taken out, enter the market. Because number one, this market already sweep this liquidity here and go up to peak fair value gap. It did not reach it even reached the other block a little bit, this other block a little bit. So it's like the three the three things we are looking for were clear here. Liquidity were clear, fair value gap were clear, other block were clear. See, the market will turn back in a massive way. When the market is able to clear the three, it will come back in a massive way. You see, I'm saying now. So you can see all these are liquidity. This one came to what? Sweep this liquidity. This is liquidity. This one came what to what? Sweep this one. Now you are seeing now came to sweep the liquidity here. Eh? You see now? Support. They did everything. Support. We have three support. Resistance. Support. It's the same thing. Double top, double bottom, double top. It's the same thing here. Double top, double top. You see, double top. You see, but I'm giving you more explanation to let you know why we have double top and why we have double bottom. It's because they want to come and sweep the sweep liquidity. So it's as simple like that. I think I've done justice to this thing very well. If you look at this very well, yes, change of character happen here. Yeah, change of character happen here. And when it happen, what happen? You see the market move down. One change of character happen, you see the market sell. It's as simple as that. The same thing here. The same thing here. Now, I am going to round up here. This one is very, very important. Rally based drop. I think I will use this one to explain to start the next video. Let me use this one to start the next video.